Today's market call is presented by CME Group, where risk meets opportunity, and FactSet, financial data and analytics powered by tomorrow. A special Friday drop of market call. It's 1 o'clock on the East Coast, May 3rd. As I mentioned, Friday. Not often you see Dan and I on a Friday, but you know what? Who knows? That might become the norm soon enough. We shall see. But this is market call for this Friday. Letter K for May. How are you, Dan?
I'm doing okay, Guy. You and I spent a lot of time together the last couple of days. I think a lot of our faithful viewers know that we're down in Miami. We're at the FactSet Focus Conference. We did market call from the stage there. That was kind of fun. We did one live. We did them both live. We had Liz, one in front of a live studio audience, which we don't do that frequently. That was a lot of fun.
No, it was a lot of fun. I think people enjoyed it. I think our regular audience probably enjoyed it. Amanda and Jacob were down there in Miami helping us out. It was a good trip. I will tell you that, we flew together and I, much to my chagrin, I carried my bag onto both flights there and back. And yesterday, before we get into the market, I sat next to some lovely older lady with a service dog in her bag, which was fine. I mean, it's because I generally, sleep on a plane anyway. But as Dan will tell you, I was all knotted up. Anyhow, that's neither here nor there. Let's take a look at the rundown. Amanda figured it's Friday, so she's going to tweak me a little bit. The all-important jobs report. I just love that. Yeah. Apple jumps on earnings. Did they jump on earnings or was something else, Dan Nathan? We will discuss. And weight loss and travel stocks on our radar screen. So let's get into it right now because obviously, the jobs report did come out. It was a tad soft. I think the interpretation of that sent yields lower. We'll look at all those things. We'll see. But it's funny how so many people are discounting and actually forget about discounting the fact that there's a certain absurdity about talking about stagflation when you clearly have the slowing growth, the stag part of the equation, and you clearly have the inflation part of the equation in the form of sticky inflation. Yeah, maybe not to levels that we've seen historically, but still levels that are disappointing and disconcerting to, I think, the Federal Reserve. The last piece of that puzzle is obviously employment. Now, this was not a disastrous report by any stretch, despite what former President Trump said this morning in that presser after or before he went to court. He talked about how disastrous the number was. It's not disastrous, but it's starting to trend, I think, the wrong way for the economy, but maybe the right way for the Fed, which is why the market's probably rallying today, if that makes sense.
Yeah, well, I think making sense of it, Guy, is really hard if you think about it. And you've used this expression on many occasions that, if the Fed is going to be tied to a lot of this data, week to week or whatever, they're going to twist themselves into a pretzel, figuring out what makes their job easier, right? In service of maintaining their dual mandate, right? So stable prices and full employment. And so, if anything, the inflation speaks to the instability of prices that we've had over the last few years or so. And again, like one of the things that I think is really interesting, I have not lived, at least as a market participant, in times where inflation was much of an issue. And we go back to, those pre-pandemic times, at least the way that inflation was measured, that market participants were focused on, the Fed was dying to get their inflation up to their 2% target. And now, obviously, they've been very focused on getting it down to a 2% target. But to your point, that a lot of this stuff has become entrenched. Fed Chair Powell has said it again and again over the last few years since they acknowledged that, inflation was not transitory any longer. This was in late 2021. That they don't really know what they need to have happen, right? Because you say careful what you wish for. If we were printing, 300,000 on the monthly jobs reports and all of a sudden 175 is disaster, well, what is 100 going to be? What is it going to turn like? How quickly will it go negative? How quickly will the unemployment rate that has been below 4% and at 50, 60-year lows, whatever it's been, how quickly will that start to get elevated? And how might we see consumer spending fall off? And we spent some time talking a little bit about that consumer number. Listen, I'm not in the camp where, I want to see a precipitous slowdown, you know what I mean? That will give the Fed the green light to start lowering interest rates. Like, to me, that doesn't make a whole heck of a lot of sense. So I think in a lot of ways, and you've acknowledged this too, Guy, and I'll shut up for a second here. But Fed Chair Powell, since he took over the job in 2000 and early 17 or so, has been inclined to normalize interest rates whenever he's had the opportunity to do so. For the most part, that has mean raising back in 17 and 18, but he's gotten a bit whipsawed or, by a whole host of events that are out of his control, but every so often by the stock market too. You know what I mean?
Yeah.
So to me, if you interpret everything that we've learned this week from the Fed, data, earnings, what's going on geopolitically, that means that the stock market should get back on its horse and get back to new highs. That doesn't make sense to me.
No, nor does it. And it's funny. We talk on television almost every night, for better or for worse. I'm sure a lot of people wish that was not the case, but it is. And words come back to haunt you, and we don't really run from anything, and we embrace the things we get wrong. But let's put up this slide, because I'm telling you right now, whatever the hell today is, May 3rd, whenever he said this, I guess it was May 1st, I don't see the stag or the inflation. Okay,
Yeah.
you know what? That's clever. Good for him. I'm sure he had some speechwriter, come up with that one. I'm here to tell you, and you put a bookmark on this one. If I'm wrong, I'll say it, but this is going to come back to bite him in the ass, because I think most people that are actually paying attention see both. So it's clever and it's cute, and I get it, and it's it makes for some fun commentary on TV, but there's nothing funny about it for a lot of people that are struggling with both. So I just wanted to throw that out there. And again, I'm not a hater at all, but I think there's certain jobs that lend themselves to a level of seriousness that I think you have to, our job, fortunately, is probably not one of them in terms of what we do at 5 o'clock, at least. We try to have a little bit of fun with it, but there's certain seats that require certain decorum. And when you start trying to get too cute is when you get yourself in trouble. But the next thing that, again, sort of makes sense are 10-year yields. And let's take a look at this. I mean, we were obviously north of 4.7%, and now you're seeing the move today. So do we get back to that moving average? Yeah, I think Carter Worth would say probably, yeah. I mean, you could probably see, if you look, your eyes can see that uptrend that is still in place from, I don't know, January, February of this year type of thing. So, we'll see what happens. The data suggests today, obviously, that yields should be lower, not because inflation is taming, because, again, maybe things are slowing. And today it was found itself in the form of the job market, Dan.
Yeah, and again, to your point about that, look, Amanda just did that. She is so good.
I knew it. I knew she could. I mean,
being at FactSet this week, she got probably more kudos than you and I did, because we were on the stage a bunch in front of a lot of FactSetters and a lot of FactSet users. And as we were talking like this, and you guys see it every day when we're doing market call, she's really good on that stuff. So it is interesting. People ask, why do you guys focus so much on the charts? And they kind of work. I mean, you know what I mean? So your point would be, if they close below that uptrend that's been in place from, that early February low, then that moving average is probably the next likely spot, if you will. And again, that's the thing, Guy, is that, Carter says this, and he does a great job. And I think he's back with us on Monday or Tuesday on Market Call. He's like, back in September, when we were kind of, pressing up against that 5% level, it's like the narrative was higher for longer. Well, what happened? It went from 5 to 3.8 or so percent. Here we are. We've had this nice, kind of stair step function of move higher from those levels. You see, we've held those uptrends. And if we break this uptrend, where might we go? Guy, do we get back to that kind of March low that was 411 or something like, you know what I mean? Like, and then you tell me, if stocks, where should they be? Do we get back to 5,400 in the S&P 500 if that's the case? So to me, a lot of this stuff makes sense if you're just looking at normal correlations of these risk assets. You know what I mean? But the other thing, I'll just say this, is that I think you mentioned oil. So with yields down, we've seen the dollar down a little bit. We've seen oil below 80. We've seen Bitcoin get back going a little bit. Your gold, it's kind of stuck here, but I think you'd probably say it's okay. You know what I'm saying? When the dollar was rallying and yields were rallying, we didn't see gold absolutely get destroyed. You know what I mean? Definitely came off those highs. So I don't know. Thoughts on that whole little pastiche that
Yeah, well, the gold, so we have a gold chart up. So if you go back sort of like mid-March into April, you'll see a similar formation in terms of, made that high, then you sort of spent the next couple weeks sort of, yeah, exactly. There's your cursor right there. And so we made the next move higher. And I think that's sort of, to a certain extent, what we're seeing now. The oil move, although I didn't think it was going to happen, I want to be crystal clear about that. The oil move in retrospect sort of makes sense as you start to see some of these ISM numbers, you start to see the jobs number, you get the sense that things are slowing down, especially with that 1.6% GDP print. Again, I guess it makes sense that oil's going a bit lower here. I'll stay the course and say I still think we're due for higher oil, but you can understand how that would be a contra call at this point. So all these things, again, when you think about them, to a certain extent, they make sense. The next slide showing Fed rate cut, the probability, I guess, again, this is a CME, I guess makes sense as well. We were sort of pushed out, and then with today's or maybe the last few data points coming in, seemingly suggesting that maybe that rate cut, again, 6 rate cuts expected last year, down to 1 or 2, pushed out to December, now getting maybe pulled back into, I don't know, the fall or late summer type of thing. And listen, it makes sense in terms of the market being a discounting mechanism and trying to figure out all these things. So there you go. I mean, that's what's happening today in a nutshell.
When I look at the distribution of potential for cuts as we think about these next meetings, obviously it's that November meeting, which comes right after the election. That's probably the one that people are most focused on. If you were to get one earlier, you go from a July 31st meeting to September 18th, Guy, and then you don't have one until after the election.
Mhm.
And you would have to have a flat out disaster for the Fed to be cutting interest rates right into that election. And you've made this point on many occasions. Like if you had a surprise, let's call it 50 basis point cut by the Fed because of some of the stag sort of issues, or there was some sort of event outside of the control where the Fed usually just goes to an easier monetary policy, I'm not convinced. You're not convinced that that would be a great thing for stocks at that point too, because there's probably something going on in the economy.
Yeah, well, it would because something clearly happened, and or the market is pricing it in some sort of flight to safety in the aftermath of something that obviously we're not going to be able to predict happening. Let's take a look at the S&P chart because again we've talked about this seemingly forever, but that moving average is still daunting, still down there 4750. The last time we even had a conversation about that touching those levels was basically in Thanksgiving of last year. We're almost, well, we're not almost, but we're 40% through the year, let's just say, and we haven't gotten close. So the longer we go without touching it, again, the longer you have, we're over 300 days now, I think, without a 2% closing low in a day. I mean, all these things to me just sort of, with each passing day, to me, it just gets a little more worrisome. I understand people say, and I'm not going to use the term, how things are working out in the best possible scenario. I know Dom Chu put out a tweet earlier today. Yeah, I just
wait.
I
Best
just don't
possible
see it.
scenario, is that Goldilocks? Is that what you were going to get to, or no? Listen, I look at this the S&P. This is the
Yes,
future chart here.
but it's not a term you've ever heard me use.
I know. But that 4750, you see that level, the breakout level. What's interesting when you go back to December, we've highlighted this on many occasions, that breakout level after that consolidation just below, I think it was like 4650 or something like that. It was after the Fed presser when, like folks were pricing in 6 cuts in 2024 and cuts for the right reasons or so. And, I want to go back to, let's throw up the crude chart because, Amanda drew that uptrend that we saw on yields. Okay. You can draw an uptrend on this. We're stopped right at that uptrend, Guy, from December. Let's go to the dollar, the US dollar index. Okay. If you want to draw a line from, that low
Same
in
type
January,
of thing. Yep.
same thing. So the technicals are suggesting that we pulled back to levels in all of these key risk assets where they should have found support. Let's see if they break through, because if oil goes lower, the dollar goes lower, and yields go lower. Now let's go back to that S&P 500. Guy, you might have the answer why we've never whiffed that 200-day moving average, okay? Like, why we never got really oversold, like, yeah, maybe 2 weeks ago, we got a little oversold when the S&P was down like 5% or something like that. But if all of those other things are going lower and they break support, it would suggest that under normal situations that the S&P should go back and retest those prior
Makes
highs.
sense. Yeah, absolutely. Without question. And maybe it is just a back and fill in those, in those charts, back and fill over an overbought condition. Obviously, the S&P is maybe bouncing on an oversold condition, but both make sense. Bitcoin's another one that I guess sort of makes sense. Rallying again. I've talked about this dozens of times. Bitcoin to me is an overlay of what the Fed's going to do, and as people got more encouraged that maybe you'd see rate cuts earlier this year than anticipated, you saw a commensurate move to the upside in Bitcoin, which makes sense to me. And again, maybe this is bouncing on an oversold condition. So all of these things that we're talking about are seemingly taking place. Whatever was overbought is getting sold off. Whatever was oversold is getting bought up, and things are starting to revert to the mean. And then next week, do we start to get back to the trajectories and all of these things that were in place for the last couple of weeks? I mean, that's the rub right there.
Yeah, no, and I guess, another thing that was oversold was Apple. We previewed it a couple times this week, reported earnings last night, and again, we covered it on Fast Money, and you guys have probably all read a whole heck of a lot about it. We're just not going to get into too much of the detail. I mean, as far as I'm concerned, as far as the quarter and the guidance, they just weren't as bad as feared, and I have a lot of questions about what they're suggesting, or at least the commentary from the call in and around China. Tim Cook is suggesting you got to look past this 90-day cycle. I just don't see a lot that's particularly interesting. I also think it's interesting that, until that headline came out, Guy, about the $110 billion buyback, the stock was up just a little bit. And again, you would have expected that given low expectations and how the stock has acted. But, the first comment that we made on Fast Money as all this news would just kind of got done hitting the wires here was that $110 billion without a specified amount of time in which they're going to do it. Now, this company has been known to do accelerated buybacks, meaning they go in the market and they buy pretty aggressively. And they detail that after the fact, by the way. So maybe the assumption is that, they're going to get in there and buy tens of billions of dollars as the stock has, languished and underperformed. But the company on average over the last 2 years has been buying about $18 billion in stock a quarter. And then our friend Karen Feinerman on the call made it before you were going to get to it, is that, okay, if this company is earning and they're guiding to low single digits earnings growth, and they're retiring shares with cash that could be earning 5% or so, it's not accretive for them to do that unless they think that the shares are really cheap and go higher. Let's hear what you have to say about whether the shares are really cheap or not.
Well, I
Given their
think,
growth profile.
from what I've learned over the last 17 years, seemingly, almost every CEO will publicly say his or her stock is too cheap. So I'm sure there's a faction there that believes it as well. But when you look at the math, just math, that suggests otherwise in terms of Apple. I don't think there's anything cheap about it. And we've said it a bunch of times, but it's worth saying again. I would say 7 or 8 years ago, maybe even longer at this point, because time goes by very quickly. When Apple was trading at a low teens multiple to earnings, like 12, 13, 14, and it was for a long period of time. I mean, it was trading at a trough multiple when it was a growth company, and it didn't make a whole hell of a lot of sense at that point, especially when you took into consideration the amount of cash on their balance sheet. Now that it is a value company, and I think, we can debate whether or not that's the case. Clearly, it's not a growth company anymore. It's trading at a growth company valuation, at least in my opinion, it is. So there's something a bit amiss here. I mean, again, given today's move, it's probably trading, Dan, you have it in front of you, 25 and a half times next year's numbers-ish. Again, assuming that those numbers are going to come in, and this is not me talking, this is Tim Cook, mid-single digit earnings, mid-single digit revenue growth. And now I think it's 5 out of the last 6 quarters, year over year, you've seen revenue declines. I think people will take some solace in the fact that margins maybe see a slight uptick in margins, maybe. So that was a good thing. And the other thing that I mentioned last night is the fact that Services, I think, as a percentage of overall revenue, came in close to 26%, which I believe is a record. So
Yeah.
that's good. So there
Yeah.
it is. I mean, that's it in a nutshell. But to your point, it was, and you can't convince me otherwise. The headline of that 110 billion buyback, that to me is what gave a little juice to it. Whether justified or not, I'm not suggesting it should have. That's to me is what
Oh,
happened.
guy, the stock's up 7%. I mean, that is probably most of the gains, in my opinion, because I just don't know why you'd be buying it on the fundamentals right here. Expected EPS growth for fiscal year 2025. Okay, so we're midway through fiscal 2024, and we know that again, new iPhones don't get released until September, October, November, depending upon when they announce. They usually announce them in September. Sometimes they're shipping late September, October, so you won't really get a huge benefit for the full quarter. But 2025 consensus estimates expecting 9% EPS growth, which would be the highest in 3 years since the bounce back in 2021, with kind of mid-single digits revenue growth, flat-ish margins. Here's one thing we haven't talked about, Guy. They said they're going to be making significant investments in generative AI. Okay, so if that is to the tune, let's say, of tens of billions of dollars, which is what the sorts of numbers that we've seen in and around some other these large platform companies, at some point you might see some margin pressure, especially if it's not something that is commensurate with a big upgrade cycle for their hardware products. But you could see some service revenue. You know what I mean? Like that's kind of how that all shakes out. And I just want to make one last point about the buyback. Doug Cass hit us earlier today from Seabreeze, and he writes this on Real Money. Apple earns 5.4% on short-term treasuries. That's 6 months on its cash. Apple PE is 30 times. Okay, that's current, about 26 times next, which means they earn only 3.3% on buybacks. So again, if you're doing this, you either know that the headline is going to be the sort of thing that juices your stock, or you think that your stock is cheap relative to what your product kind of footprint or like blueprint is, and you think it's going to cause a big upgrade cycle the way they have seen, let's say, every 6 or so years as it relates to iPhone because of some new whiz bang sort of technology. But again, the jury's still out on that, Guy.
Let's see what they say. What is it? June 10th, the Worldwide Developers
Yeah.
Conference. I mean, it's interesting. Was this the ground? Was that specific announcement laying the groundwork for something you may or may not hear in a month or so? So I'll
Yeah.
just throw that out. I'm not a hater. Quite frankly, I don't really care one way or another about Apple, but I was wrong. I thought this was a stock that was probably trading sideways. I thought the quarter was going to disappoint. I thought the stock was probably going to trade down between 163 and 165. That didn't happen. So let's see how it plays out. The other one begins with an A that we've actually talked about for years is Amgen. And we had, I think, again, I said it last night, the Michael Jordan of biotech analysts on our show. And
well, wait, really quickly. He is a sector specialist guy. He's not an analyst. I want to be very clear.
Okay. It's
And
just
Michael
thing.
Jordan, you always say this. You say sometimes, we had Steph Matteau from the New York Ranger.
That was a good podcast.
It was a great podcast in your feed, on the Tape podcast feed. And you said, I'm not being hyperbolic calling him a legend. Okay. That was Steph Matteau. I think you calling Jared Holtz the Michael Jordan of health. I think there's some hyperbolicness. I'm just saying that. I like the guy. He's good. But Jordan-esque status guy, come on.
Fair enough. I mean, he was there, so I wanted to
before we get into this, because we have a couple minutes, did you stay up for the Knicks game last night?
Yeah, 100%.
Your main man, Brunson,
is
pretty happy.
You know what? Listen, as you can tell, I'm wired a certain way, and there's a propensity for me to like certain people and have utter disdain for others. Okay, others that the cheerleading type, right? The ones that put out, oh, Goldilocks is here, all that shit that just makes me friggin' crazy.
Yeah.
The flip side of that coin are hockey players, because none of them are that way, number one. And two, people like Brunson, who's a effing stud. The guy, watch him play.
Yep.
Watch him play. And watch his press conferences after and his interviews. I mean, he's just a stone cold killer. I love everything about him. And that Knick team, by the way.
Yeah.
So they went up big in the first quarter. I mean, really big in the first quarter. They were doing a number on the glass. Obviously, the Sixers came back and took the lead at home, crowds involved in the game, blah, blah, blah. But the Knicks are a gritty friggin' team. I think, as a matter of fact, they say something like all grit, no quit, and then something else that I found pretty cool, like, I don't know, whatever the hell it is. And
You're
that's the
fired up.
team.
And what you like
Well, I
about
like, you know why I like the team? Because they don't take shit and they
Yeah.
don't back down, which I love. Anyway,
Yeah.
so
All
you
right.
brought it up, not
Well,
me.
I
And
I
Amanda's like, please stop, I'm begging you. But
fine. No, but, like, listen, I'm with you on that, and I think that,
oh,
listen,
tight knit.
tight
All grit, no quit, tight knit. There you
yeah.
go. I knew it was
All
something.
right. Well, listen, both the Rangers and the Knicks are moving to the second round of the playoffs this weekend. So how about that? That's
Got the
exciting,
Knicks.
right?
I don't know when the Knicks Pacers series starts. I know the Rangers
Sunday.
series starts on Sunday. So you got and they're at MSG. So Monday, this is like a Dan Nathan special,
Yeah.
except you won't be around. But Sunday the Rangers play, and then Monday the Knicks at the world's most famous arena.
I'll be very frank with you as the playoffs go into, these further rounds, the price point just gets insane.
Painful.
I just it's not something I can stomach, to be very frank with you. So it's not on my I'm perfectly happy to watch it in a nice Irish pub here in New York
Now,
City or at home or something like.
here's
Whoa,
something else for the
Irish. What?
no, that's if you ever ask me any of these people, come watch the game with me, it's just not happening at a bar. As a matter of fact, at 60 years old,
Yeah.
I could say without equivocation that I've never gone to an establishment to watch a game. It will not happen.
All right.
I have
All
zero
right.
interest in
All right.
being around
I'm just
people.
gonna- I'm just
Oh, you
gonna-
see that shot?
All right. I'm just going to cut you off. This says more about you as a human.
I
And
agree.
you
I'm
are
not
a great.
suggesting.
No. You are a great human. Okay. But you're like kind of antisocial. And by the way, I think it was last Wednesday night. It was the night of, I think it must have been Knicks game 3. I was at dinner. We walked out of there. We went to a bar called Jake's Saloon. It was on 23rd and 6th Avenue. And, I get a Bud Light in a bottle, and my buddy gets a vodka, Tito's Rocks, a little twist. And we're not even halfway through it. And the bartender brings over, the same thing. He said, that's from the owner over there, Jimmy. And he's a big Fast Money fan. So, Guy, like, you're one of these people. You love being out there with the people. I spent 2 days with you with hundreds of the people who knew you, and you chatted them up, and you were like super gracious and interested in everything they had to say. You can't go into an Irish pub in New York City when the Knicks game's on and enjoy that. Okay.
No, because I'm there to. When I watch a game, I want to watch the game. I don't want to get in all the other things, the ancillary things that go on at these establishments. I have no
Drinking
interest in
beer
the
and
small
eating chicken
talk
wings.
and yeah, no. It's just
All right.
that's me. Well, I
Okay.
don't know what to tell you. I'm also not one of these people, and you see all these. And if you're one of these guys watching this right now, you might want to rethink this. If you're wearing, what do they call those things?
A
Those
jersey.
vests? No.
I wear vests all the time, Guy.
But with the name of like your company on them, with the no sleeves,
Yeah.
and like 7 of you go to get lunch and yuck it up, and then you go out. It's like the scene. It's very much like that scene in Boiler Room, if you recall, when all those dipshits go out together. You're just looking to get beat up by some asshole like me. Anyway, I don't know how we got on any of this, but let's
Jared
go
Holt.
to
Jared Holt's from Mizuho.
All right.
He is the pharma sector specialist. He's been coming on our show for a while. He's really good on these GLP-1 drugs. Amgen, as you mentioned, you've been talking about this name for an awful long time. Huge gap today. You see the headline, right? So they have a GLP-1 that is progressing, I guess, in FDA trials. This one is not going to be a weekly shot. It's maybe a quarterly or something like that. So you're getting a big move. You asked him, I thought, a really good question, Guy, about valuation.
Every once in a while, it happens.
No, I didn't mean it.
I'm kidding.
I know.
Kidding.
But you asked him a great question on valuation. You said, why shouldn't, if this drug gets, starts moving along and it looks like it's the real deal. He said they're already starting to manufacture the pens. Like, that's one of the big bottlenecks for these sorts of things. And you said, couldn't this get to 20, 25 times, or something like that? He pushed back a little bit. My question to him was, well, if Novo owns this space as Lilly does, it trades at 30 times, right? Like next year, and you're seeing a decelerating growth and lots of competition coming online, you should see some sort of multiple compression between some of the what. And his point was, well, it's going to take a while
Yeah.
to sort of ramp this up. And those companies, Novo and Lilly, didn't start getting those premiums until the drug was in the market.
100%. And that's why it really is an interesting conversation, real quick, because Amgen, which has probably close to 24 major drugs. When I say major drugs, drugs that will do $100 million or significantly more in revenues per quarter. I mean, it's one of the few companies that actually say that. Trades at about, even with today's move, it probably trades 14 and a half, 15 times next year's numbers. And my point in asking the question was, in a market that's seemingly rewarding a lot of companies before the fact, it seems to me that if Amgen gets some sort of traction on this, a mid-20s, 23 to 25 multiple is not insanity. And he said, there's still a long runway, but we've also seen, markets give the benefit of the doubt a lot of times to these companies. And, that's trading, right? That's trying to interpret what's going to happen, what you think's going to happen, and so on. By the way, last time he came on his show, I think Amgen, as I mentioned last night, it was trading in the mid, I think 315 or so, and he thought it could do a bit of a back and fill. And yesterday, prior to this, this was a stock that traded below 270, and he actually sort of thought that could happen. So I wanted to give him kudos about that, and that's where the Michael Jordan thing came out.
All right. Well,
By the way, I'll say this. I haven't looked today. Maybe you can see it in front of you. What the volume in Amgen is. My sense is it's probably a big day. If we could do a non-static longer-term chart, these are levels where, now it's got to start to prove itself, Amanda, so we'll see. So, if it doesn't get through those prior highs we saw, maybe, no, we got to do, there you go. Maybe we have a little bit of a problem. So you can see that prior high. You can see where we are now. So we'll see. I mean, let's put it this way. I don't think you have to go plowing into Amgen today. I do think you're going to get an opportunity at better levels, but we wanted to bring this one up.
Yeah, and let's pull up Eli Lilly, which had great results, great guidance, stock gapped up. It's interesting; it's filled in that gap, guy, in the last couple of days. Again, I think a competition story is going to be interesting. Mel, who obviously knows this space inside and out, that would be Melissa Lee.
I was going to say, I know what you're talking about.
Yeah, she did a fabulous documentary a couple months ago called
The Shot.
The Big Shot.
Oh, Big Shot.
So she knows a lot about this space, but and she highlighted the fact that it's not, there's going to be competition in injectables coming for Lilly and Novo, right, who own the space, but they're also in trials for lots of other uses for these drugs. This would be Lilly and Novo. They're going to defend their modes pretty significantly. But it is interesting that the stock has consolidated and it had a nice little gap, didn't make a new all-time high, guy, and then filled in that gap. Let's pull up Novo for a second. And Novo, on a relative basis, has acted a bit worse than Eli Lilly.
It has been over the last couple months.
Yeah, but their guidance guide was not that great. Like they're talking about pricing pressure and the like. So if you have more competition coming on and you want to expand your market share, you're going to have to lower prices, which is going to put pressure on margins at a time where Novo has been making acquisitions to increase their their distribution and manufacturing and the like. And so to me, like, these stories might be done for a little bit, guy. There might be other ways, and we've been looking for different ways to kind of play this.
Yeah.
But as you get longer in the tooth, and it's not too different than the high-end GPU story for generative AI. There's been one clear winner. There's been very few that have been able, in the semi space, that have been able to kind of grasp a little bit of that picture because they don't have the market share, and it's not different than GLP-1s.
You've made that point a couple times. I think it's correct. Pull up that Lilly chart real quick. I don't want to get bogged down here, but if you look at this price action, that specifically, so look at since February. This has been, again, lower left, upper right. Then February, we obviously traded up to those levels, and we've basically been going sideways to slightly lower ever since. I mean, one of two things are going to happen here. Obviously, it's either building a somewhat platform to take the next leg higher, or we sort of topped out in the long term and we're going to start to roll. And if we do roll, what do we get down to? And it's probably in the form of that moving average, which I think probably comes in, if I had to guess, by the time of decay, 650 or thereabouts. And you'd be like, you're out of your freaking mind. There's no way. Well, I am out of my mind, number one. Number two, there is a way, because if you go back and look at Eli Lilly over the last 5 years, you've actually seen moves of that magnitude a number of times before.
Yeah. Before we get out of here, I want to hit some stuff in the travel space, and then we'll quickly look
We
at
were
some.
just traveling. Oh, you mentioned that.
Yeah, we did. We did. So last
By
night,
the way, we had nobody cares. I'm sorry, Amanda. I really am sorry. So we were supposed to yesterday, which was Thursday, we did our 8:15 pre-market, whatever. I don't know, but it
it's
was
like a
fun.
version of market call, but it was
Right.
at 8:15 was live. It was not
Okay.
recorded. It was for all the fact set people.
Okay. You're talking quickly. You want me to move on with this. I understand. So let me quickly tell you what happened. So Dan, before we started, showed me his phone, and I'm not quite sure what he's showing me, but he's showing me that a flight we're supposed to be on was delayed. I'm like, oh, that sort of sucks. And then 10 minutes later, it's delayed even more. So Dan, quick on his feet, he's like, well, we got to sort of change gears here. So we were supposed to go from Miami to Newark, which is, a stone's throw to the NASDAQ. I mean, the 9 iron away. But we pivoted and we went to the Fort Lauderdale airport and flew into JFK. Now, if you're not from the area, it might not mean a big deal. JFK is at the ass end of the effing world. I mean, you might as well land on fucking Mars. And it took us about, 2 hours to get back
Hour and
from
a half.
JFK? Anyway, we made it back in
But by the
time.
way, it would have taken us an hour from Newark to get
No,
there. Yeah, it would
patently
have.
false.
Okay, whatever.
Anyway,
All right.
sorry. So let's look at these
So
travel
on the
stocks.
travel,
Sorry.
and shout out to AD because she hooked
No,
us up.
killed it.
She changed the flight. It was amazing. So look at this. Expedia, this is a stock that I kind of want to like. It's a company that I actually really like, and I use their service a lot and all that sort of stuff. I think it's a really cheap stock relative to expected growth, but not a great quarter on a bookings miss. You see it there from that Bloomberg, and they cut
Yep.
guidance. And it's kind of hard. Like, you don't want to get bogged down staring at fact set estimates. You know what I mean? Like because they do move around, especially as companies give guidance, as their competitors, kind of report and the like here. But bad break there. You can see obviously the stock in the fall was very oversold, got a little ahead of itself. So 2 consecutive big earnings gaps, guy. So you have revenue and earnings estimates for this year and next that have come down from mid-20s to kind of either low 20s. They probably settle out about
High
20 for
teens.
each of them. But the stock is, it's really cheap. So it's
Yeah.
a tough one. Decent balance sheet.
Real quick, let's look at a longer term Expedia chart, because the funny thing about this is the volatility in stock is staggering. I mean, moves you've seen moves along the way. I mean, you can look at it here and see. I mean, it can't figure it out as well. If you look back, this was a stock in 2021-ish, or maybe even late 2020. We're basically at the same price, but look at how we've got there. I mean, look at the moves to the upside and the downside, and we're right back where we started. So the market has a very tough time determining where the stock should be. On top of which, yesterday you actually posed a question to me about exactly this. If you think some of the things are deteriorating, what does it mean to the travel? We actually talked about this, not that it helps anybody here, but at 8:15 yesterday down in Miami. Anyway, please continue.
Yeah, I just say this, okay? This company has now like a sub, $18 billion enterprise value. Let's just count that EPS growth. Let's call it high teens, okay? From mid 20s and high single digit expected revenue growth, 88% gross margins, a pretty good balance sheet. They have nearly $6 billion in cash, and they have a little over $7 billion in debt. It's fine. So if this stock gets anywhere near to those fall levels, I think it's a buy. I mean, that's just my 2 cents. Booking, on the other hand, trading better on results that look pretty decent. Again, you'd say to yourself, well, aren't these companies pretty similar? They have some different exposures. The last one here, guy, Live Nation, which owns Ticketmaster, and I'm all loaded up. If you saw my
Well, that's what I mean. You are you and
Yeah.
Finnerman are single-handedly keeping this thing afloat.
Yeah. Well, and so this one interesting though, again, you'd say consumer discretionary and the like here, and it's got investigations, and the government's all up there, everything like that. but good quarter, good guy. If they're ever going to do it, it's going to be this, because if you're going to concerts in the spring and the summer, you're going to, all these events, you're buying them now and you're going to them later, that sort of thing. So again, I just thought that was really interesting. All right, last thing before we get out of here, Guy, earnings calendar for next week. We are not done. Palantir on Monday. That's one you always find interesting. Tuesday, Disney after the close. Oxy is a name you talk about a lot. Lyft also out there, and then Uber, I think it's Wednesday morning, and Airbnb, which I'm sure there's some things we could take away. Robinhood, which you mentioned last night, crypto coming back, should be kind of interesting for Robinhood, and then also Shopify. The rest I don't really care about.
Yeah, no, you got roadblocks on Thursday, which I always find to be really interesting. What do I take away from this? Well, you mentioned, why are you laughing?
I mean, because you could give to what's about Roblox. I got asked a question last week. Do you remember that? Courtney,
it's like you build your gaming thing.
Yeah, it's a platform. Yeah, it's a platform. No, that's Unity is the platform. Roblox is actually a bunch of games that the kids use, but your kids are all grown up, so they don't use the Roblox.
All right, so here you go. I'll be serious for 1 second. Tyson, very interesting. I mean, what's going on the food inflation front? You're going to learn something from Tyson without question. Uber and Lyft have become two entirely different companies, but why Uber is important, in my opinion. Amanda, real quick on the fly, pull up an IYT chart. Now I'm really going off script, but look at the double top in the IYT in the transportation index, which the top 4 holdings are all the U's: Uber, Union Pacific, UPS, and whatever other U that I can't think of. And here you go.
United Airlines is
United Air. Thank you. So do a longer term chart. You'll see what I'm looking at here in the IYT. This is a little interesting. Thank you.
Wow.
Look at that, Dan Nathan. So we're at pretty big support levels. You see those prior highs. So the reason why I'm watching Uber so closely next week is not because of Uber necessarily, but what it could potentially mean to the transports, and then subsequently, what do the transports mean for everybody else?
Yeah, and I'll just say this is that DoorDash had not a great quarter. That Uber Eats, maybe Uber Eats is taking share. Who knows? But I think that's worth noting. Airbnb extrapolating maybe something from the Expedia. Expedia owns the Vrbo, which is a competitor to Airbnb. Not a huge part of the revenue. And then Disney, after that Netflix subscriber number, which was big. I mean, Netflix gapped down a lot, but that was a big beat. Let's see who that came, whether it was very Netflix specific. We know that they're doing a lot of things in password capture and the like here. So Disney will be interesting Tuesday after the close. All right, Guy, you and I on Monday are going to be in Los Angeles. We're going to be broadcasting the market call from there, from our friend Brent Montgomery's studio Wheelhouse in West
Wasn't
Hollywood.
he the guy that he was the CBS Sports guy, right? That did the NFL Today.
That's Musburger, but that's fine. And then we are going to be at the Milken Conference on Monday, doing a little fast money. You're going to be coming back on Tuesday. I'm going to be out there all week. We really appreciate you guys being with us here on a Friday. Like Guy said, who knows? Maybe Friday will become a thing. Have a great weekend. Enjoy watching your teams in the playoffs. Maybe the Yankees could put a couple wins together for you, Guy. That would make you happy here. I know.
Early. I mean, again, Yankee fans, Yankee fans don't get, Met fans get all excited. I guess Francisco Lindor was sick, and he, good for him.
Yeah,
I mean, if you watch baseball at Shea, you get excited about things. Mr. and Mrs. Met, and that bullshit, hit the apple, win a steak. I mean, that's Bush League Met baseball. Yankee fans, the cathedral that is Yankee Stadium, we obviously look forward to things in September and October. So I'm not getting all that crazy. And yes, and for you folks saying to yourself, my God, he's an arrogant sports fan. You're right.
All right. On that note, enjoy your New York sports this weekend. I know
don't wear the vest with your buddies. You look like a Johnson.
All right. I just wear mine solo. But I got you a vest. I went to the Masters a few weeks ago. I got you a vest with the little Masters symbol. Did you throw it out? Did you give it to somebody? No. All right. Well, I'd like to see you wear it. All right, people. Thanks everyone for being here. Thanks to our fine sponsors. That would be CME Group and FactSet. Thanks to Guy Adami. You got them all spicy on a Friday afternoon. Thanks for being here all week with us. Check out the On the Tape podcast today. It dropped in the podcast stores. Danny Moses had his Big Short friends, Vincent Daniel, Porter Collins, and then Guy and I had a conversation with the CEO of FactSet. That would be Phil Snow. That's on the back side of that. Enjoy. We'll see y'all on Monday.